everyone, and welcome to the week ahead. I'm Tony Nash. Today, we're joined by Jim Iuorio and Tracy Shuchart. Albert was going to join us, but he is off in some mysterious place. So we're going to cover a few different key themes today. First is the bear scare. We've had a lot of volatility this week, and we've had recession talk and all sorts of things happening this week. So we're going to talk through that with Jim. And also, I heard him recently talking about post-election rates and spending, depending on who's elected. So, I'd really like to go down that, tunnel a little bit. I also want to talk about Nvidia and tech, really more tech. I mean, Nvidia's been kind of a headline this week, but really kind of what's going on with tech and indices. And then with Tracy, we've got some fascinating questions about Russia, Iran, and EU energy. They're not exactly aligned, but they're somewhat related. So I really want to go down that rabbit hole with Tracy. So guys, thank you very much for taking time. I know that you are actually so busy, and I'm grateful for it. Jim, as I was saying before we got on, I love your podcast. I love what you guys do. You just have this kind of informal but super smart way of talking to people, and it's just a great watch every time I
appreciate that so much. Thank you for saying it. It makes me feel good. Thank you.
It's great. We do have a couple. Sorry, Tracy?
Chimed in. It is.
Yes.
Of course, because I've been on it before.
So is Tony.
Yes, so have I. I'm fortunate to have been on it. So, and just, I don't want to leave Tracy out. Tracy has a Spaces every Wednesday on X, so don't miss it. She has some of the highest quality people around. I wish I could get access to the people she has. So it's amazing conversation. So don't miss that on Wednesday. So
I get scared. I was on it once. I get scared talking about energy with Tracy because it just goes, so much of it goes over my head. I'm like, show me a chart.
Right. I have to come up with questions for her on a regular basis, and I just don't want to sound stupid. So, so we do have a couple of viewer questions, and one of these is aimed at Albert. But Jim and Tracy, I'm curious what you guys think. The first question is, what do you see for the market through the end of the year? I think we're going to cover that in the first segment. So that's an interesting one. We'll cover that in a couple of minutes. The other one is this, and it's about debt. The question is, how does the lack of mark-to-market, and I think this is related to commercial real estate, how does the lack of mark-to-market factor into your thinking? Seems that in general, it's becoming an accepted thing. So I asked for more detail on that question, and I think they were talking more about debt and commercial real estate. So let's get into that in that first segment, Jim, as we talk through, looking at what's going to happen in markets before the end of the year. How does mark-to-market, especially in CRE, affect? I know you're not necessarily a CRE expert, but I think it's a factor, right? So, this week, we have seen this kind of bear scare. We had people talk about this turn to bear markets potentially. And, we have this, the Fed announcement coming up this week. So I've got the S&P 500 on screen. So Tuesday especially was kind of a hard day. And we're not seeing the immediate bounces that we've seen over the past couple of years, right? Where things turn down and then right away where they're back up. And I think especially as we're expecting the rate cut later this month, there's not as much, bounce factor in markets. So what do you think is happening there, Jim? You've been trading for 35 years, I think. Is that right?
Let's say 35. It's longer than that, but whatever.
Okay. You've been trading for longer than 35 years. So,
yes.
What's your thinking on the current action? Are we headed into kind of a down sideways market for a while, or do you think this will come back after the Fed meeting?
Well, no, I think we're in a down sideways market too. Think of what we all know intuitively, that equity markets hate tons of uncertainty, and we always have tons of uncertainty. But I will argue that right now it's a little more than normal. We are moving from neutrality to easing. Tomorrow, by the way, does this show come out live, or when do you release it?
Tomorrow, Friday.
Okay. Tomorrow will be the unemployment number. If that number comes in lower than, let's say, 120,000, I think the Fed's going to go 50. I also think this nonsense that if the Fed goes 50, the markets will take that to mean that the Fed sees something worth panicking about. I don't believe that, just because I don't think the market is.
That's what I've been saying.
Yeah, I don't think anything has respect that. They might think that they're going to be easy that'd be it. But also, the presidential election does have huge ramifications for tax policy and the macroeconomic condition. I try not to be very political. That's a lie. I don't know why I lied on your show. Sometimes
It's okay. People lie all the time.
But let's say right now I'm not being political. On September 10th, on Tuesday, there will be the debate. I think the debate is going to be a pivotal moment in this. Here's what I'm going to say to back that up. We hit our highs in mid-July. Donald Trump's odds for winning also hit his highs in mid-July. Both of those things turned on a dime. Correlation does not equal causation, but sometimes it's a pretty good clue that that's what people care about, particularly when she throws in the fact 28% corporate gains tax, unrealized capital gains tax. I said corporate tax is what I meant. Jacking up the capital gains tax normally to 44%. When you mention those things, of course, those are market disruptive. Of course, those could push prices down. So I think November and October, what month are we now? September and October are going to follow their normal election year seasonal patterns, and I think they're going to trade lower. I don't like the market even in the month after the election, depending on who wins, particularly if Kamala Harris wins. But after that, I think it's fine, because if Kamala Harris wins, I think there's going to be more excessive spending. The Fed probably comes in and buys bonds again. And that will hurt the dollar, but anything denominated in dollars will be great, including stocks. If Donald Trump wins, there'll be a sense that he's going to unleash the corporate sector. I'm sorry, I'm sucking up all the air here. I'll stop talking.
No, this is great. So,
okay, good.
So you talk about Harrison. Of course, we're not political here. So I've got on screen, and I'm going to put this on when it goes live. But the capital gains tax would go from 20 to 28%. Income tax rate would go from 37 to 39.6%. Unrealized capital gains would go from 0 to 25%. Corporate tax rate would go from 15 to 28%. And she would allow the Trump tax rates to expire. So that's not a small tax load on individuals and companies, right? And things like unrealized gains that aren't taxed right now.
Yeah, and when you say the 20% to 28%, capital gains. Remember, there was a moment where she said 44%, but she's backed off that. To call these things destructive and toxic to the market, I think, is to give them somewhat of a promotion. These are bad policies. These are people who are already being taxed. And I get in arguments with people all the time, because I will argue that right now taxes are the highest they've ever been. And then people will just say, well, no, the federal tax rate was yada, yada, whatever. No. Look at all around you on the county level, state level, municipality level. Yeah. They're coming at you from all sides. If you're someone who makes about $250,000, you are being taxed probably in excess of 50% of what you make when you throw in the real estate tax.
Especially in Illinois.
Especially in Illinois. It's absurd.
Sales tax. Everybody forgets about sales tax.
Bingo, Tracy. Sales tax. All these taxes are absurdly high. People are being pinched if they want more tax revenue. And by the way, this is so funny too. In the capital gains tax, Barack Obama came out fully and said, yes, all the data suggests that when you lower the capital gains tax, you increase revenues from that tax. Well, then why the hell do they want to raise it? And his answer was, it's about fairness. I don't know what the hell that means. I don't know what's about fairness means. I think we should look for the most efficient path of least resistance that's best for the economy. And it doesn't seem like that's what they're doing.
Right. So earlier this year, there was a vote in my county, in Harris County in Texas, for the tax board. So they levy property taxes and decide on property tax rates and your valuation and everything else. And I was telling my friends, look, you've got to go out and vote for this. Who cares about federal taxes? That's going to happen no matter what. It's your local property taxes and sales taxes that are going to count. So that went to a runoff. There were something like 3,000 people in all of Harris County, the largest, one of the top 5 counties by population in the US. There was something like 3,000 people who voted. Then it went to a runoff. There were 1,300 people in the entire county who voted on the tax assessor. Okay. These are the people who decide how much you pay for your property tax, for other taxes in the county. And people just don't get it. They'd rather kind of reel off and talk about what's happening at the federal level, which this is meaningful. What Harris is talking about is meaningful. But at the local level, people just don't even think about it. They just assume that it happens by some unnamed body or whatever. So I am curious when, this tax issue. So when you look at markets and you look at companies, and Tracy, when you look at say, oil and gas CapEx or whatever, right? And you're evaluating companies. So like what would, and you know, just in general, it's hard to understand the impact of unrealized capital gains taxes, right? But can you walk us through a simple example of what that would mean? Jim, you
Oh,
started.
sure,
Tracy,
absolutely.
Tracy, if
So
you could
this is
start.
this unrealized capital gains tax is one of the most asinine things they've put forth, and they've put out a lot of asinine things. And people equate it to your real estate tax. Well, that's a tax on unrealized gains. No, it's not. It's a tax on the absolute value in the house, and it's a local use tax. That is an enormous difference than just confiscating wealth from rich people. So
And it's low, it's relatively low, right? I mean,
well, it's not in Illinois, but it's relatively low in most places. It averages 0.97% of the value of your home nationwide. In Illinois, it's 2.9% the value of your home. So it's not insignificant there, but it is insignificant in most parts of the country. But then for them to just, so to not address the fact that these people who have tremendous amount of stock holdings, they're not going to cover them on capital losses ever. And we've seen markets go two different ways. Now, the comedian Trevor Noah, or whatever his name is, he just did a whole thing about how Elon Musk used his Tesla stock as collateral and private equity loaned him the money based on Tesla. And he's like, so it's a real asset there, but it's not a real asset if the federal government goes to take it. No, it's private equity taking the risk that they want to take. If the government starts taxing unrealized capital gains, first of all, it's absolutely theft. But one of the more important things too, you tell me the day and tell Tracy the day that we know Jeff Bezos has to sell 2.5% of his Amazon stock to meet his tax burden. And it would be irresponsible for us traders not to front run the hell out of that trade. So it will be disruptive of markets. It makes no sense on any level. Is that a good answer?
yeah, I mean, it is. So let's say your average person has put money into a 401k for 25 years or whatever. Okay. And they've faithfully put that away, portion of their check. And they now have a portfolio that's worth, I don't know, $950,000 or $2 million or whatever. Let's just say $1 million. Okay. And so they've purchased that at, let's say their cost is 300 grand. So are they going to get a tax on the $700,000 gain that they've made?
So, okay, the proposal as it stands for only people who have over $100 million. But I like your question because we all know what a government proposal and when it gets enacted, what happens.
Yeah, it's never people over $100 million. It's everybody.
No, it's everybody. And it will eventually get to everybody. It'll eventually get to people over $1 million. But that's the way I understand it, is their gain is the $700,000. So they're going to take their 22% or whatever, 28% of that and just put it in their own coffers. Like the notion that half of this country works on the fact that the federal government needs more revenue and that somehow they're going to do all this good with it and redistribute it to poor people. Of course not. Their history is not that they do that at all. Wow, that background looks cool, Tracy, but that's a fake background, right? You're not in the mountains. Right? I just noticed it when you started talking. But yeah, the whole thing is I sometimes think they just come up with the most punitive, nasty, toxic programs just to have the pitchfork villagers be going, yeah, let's go get the rich, unless you're Taylor Swift. Yeah.
What's going to happen is real estate prices in DC and Maryland are going to skyrocket, right? In Northern Virginia, going to skyrocket. There'll be more employees for federal agencies and so on and so forth. That's the benefit we're going to see. There's
sure. And by the way, you know what else? The last thing I'll say too, they know full well that if you want to actually gain revenue from capital gains tax, forget about all the nonsense, just lower it to about 8%. So you don't have this nasty dissuader of people from actually taking a capital gains and switching their investment from point A to point B. If you want to collect money from that, history shows you lower it, not raise it.
Right. Okay. So since we are political, you mentioned it briefly, but walk me through. Go ahead, Tracy. Sorry. On cap gains, can you talk us through?
Unrealized capital gains.
Unrealized. Yep.
Unrealized capital gains is horrible. First of all, what if you have an excellent quarter on paper and the next quarter then what are you going to do? Is the government going to give you money back if you
No, they're not.
take a loss? Exactly. So this is ridiculous. And as far as, something like oil companies, because you mentioned that a little bit ago, is that the capital expenditure for new projects right now is already nil in the United States, basically, because they're buying production pretty much, instead of, making production. And so that's just going to discourage any new E&P exploration and production, of course.
Right.
But here's the real question, Tracy, to you, is that are they really this stupid, or do they know it's toxic policy, don't they?
One would think. Again, I don't. It seems not. I mean, it seems like they're doing everything possible or stating everything possible that really is going to make capitalism far much worse off than anything else. It
Jim, I don't know.
discourages all kinds of businesses. It also, why put money in my 401k if
Right.
they're going to start taxing me right away on something, what if my portfolio's down the next quarter, and then what do I do? I mean, it's just a ridiculously insane policy for business and for individuals in general. So
yeah, on some level, to me, it almost seems like what they're looking for is, how we talk about single payer in healthcare, where eventually it's probably going that way. They're probably wanting it to be single payer in retirement, where there's no point of having a 401k. There's no point of saving. There's no point, just spend what you get in, right? I mean, I used to think they can't possibly be that dumb or, that short-sighted. But then when you look what's happened with U.S. foreign policy, it's hard to say that it's not intentional. What Blinken and what the other guys have done in foreign policy, you can't possibly be as stupid as these guys have been, but they are, and it's intentional. So I'm not a tax policy expert, but they have to. The people who are feeding policies, you have to assume they understand a bit about tax policy and government spending, and there has to be some intentional aspect of it.
And I hate when people chime in and say, like, never attribute to malice what can be explained by stupidity. I think that is a can't remember who said that, the great quote, but I don't agree. I think you can start looking for malice.
Well, and you look at some of the FDR policies in the mid 30s, right? I don't know if you've ever read Amity Schleye's The Forgotten Man, great book. And it tells you how malicious those policies were and how they harmed people. And FDR is celebrated as great president now, but that's post-World War II. In the 30s, his policies were disastrous. The CCC and all these things, they were disastrous within like 18 months. So people kind of want to look back to that as the glory days of kind of central government stimulus, but it was actually horrific for individuals.
Yep.
So, okay, so I want to get back to markets, and I want to, I want you to walk me through Harris and Trump if they're elected. What are Harris's, just in general, Harris's spending and the Fed under Harris, what does that look like?
Okay, so Harris's spending and the regulatory environment that she ushers in and continues on, I believe will be highly inflationary. However, the Fed will be caught in this spot because it'll be slowing down the economy as well too. So it probably ushers in a period of stagflation. I think the Fed will probably keep rates low to combat the economic slowing more so than they would a Trump presidency. A Trump presidency, now he spends like a drunken sailor too. At least he did before. There's a small argument to be made that the times he did, deflation was a little bit of a worry. Inflation wasn't much of a concern. That's a weak argument, but at least it's kind of an argument. So let's just assume that he's a profligate spender too. But the regulatory environment around a Trump presidency will be much more business friendly. So the Fed, and this is not me saying it too, this is kind of agreed upon too, the Fed will probably have to keep interest rates a little bit higher in a Trump presidency because unleashing the power of the corporate sector through deregulation is somewhat inflationary itself too. So I think that both sides are somewhat inflationary. I am perfectly comfortable with my long of gold, with my long of real estate, long silver, long copper. I like that trade regardless of what president is. But when it comes to rates, I might be trading it differently based on what president.
That's very interesting. So I think you're right. Fiscal conservative is dead, at least for
Dead.
now. It's dead. I don't know of anybody who really, aside from Rand Paul, who really is a fiscal conservative.
Massey.
Massey.
Thomas Massey, right? Yeah.
Two guys, they're both from Kentucky, right? Or is one from Tennessee? I don't know. But
those are different states, or they're different.
I don't know. They're the same thing. So yeah, those are the only two guys. There is no fiscal conservative, and the Republican Party is not as conservative as it once was. You get this, focus that it's, this really far right party, and it's actually moderated quite a bit.
Donald Trump wants to ride in on his white horse and save any business that's having trouble. He likes to be the hero, so he will spend money.
Exactly, he will spend money. So okay, and the Fed. So you say the Fed will have to raise rates a little bit because companies will be more excited about the regulatory environment. So do you think that regulatory environment will potentially raise the level of investment, of fixed asset investment that companies are doing? You do?
I do. And I think it's a confidence thing too. But interestingly here is that on Tuesday, the same day as the debate on September 10th, we will get the latest read of small business optimism. Now, the only reason it's very, very interesting to me is if you saw the reading for the month of July, it was celebrated by the Democrats because it shot higher. Well, it shot higher, small business optimism, because on July 15th, it was the highest odds ever that Donald Trump was going to be president at like 64%. It was the same time that Joe Biden was stepping down and we didn't even know who the nominee was going to be. So the odds when the survey was taken was that, oh, sure, we are going to have a more business-friendly environment coming forward. Now we see the next read of that comes out every month on September 10th. I would bet you dollars to donuts that thing is going to crater because for August, all of a sudden the script had flipped, and now all of a sudden the Democrats were going to be in office again too. And again, by the way, that they want to rein in corporate excess. They say this all the time. To go from that to being not as business friendly is not only a reasonable jump, it is the exact pathway. So like people, like when I say these things about policy, like defund the police. Defund the police was a pro-crime policy. It's a small proof to say, and again, I know I'm going off base here, but I'm trying to make a comparison.
Well, you live in Chicago, so you live it.
Yes, yeah. The proof is, do cops fight crime? Yes, they do. If we're taking the money away, does that limit their ability to fight crime? You know what I mean? Like, how stupid are people? Anyway, Tracy, I haven't heard from you nearly enough, and you're the smartest one on the call.
No. You're doing awesome.
So what do you think, Tracy? I mean, let's take this through an energy and commodities lens.
Yes.
Harris presidency versus a Trump presidency. I hear Trump say drill, baby, drill, but does he really mean that, do you think? Do you think we'll see more upstream investment?
I've heard it's first, you can't make these companies drill, right? That's first of all, and they've already been, investors have already been burned twice badly. And they're really focused on bringing investor returns, right? And it's taken them a very long time to even start to get a little bit interest. I mean, we went from 20% of, energy went from 20% weighting of the S&P 500 to 2.5% by 2016. We're just now at about 4%. And, and we're talking, 8 years, 7-8 years later, right? And so I don't think that they're going to go, drill, baby, drill just because Trump wants them to. Now, what he can do is he can make leasing easier and things of that nature, open up Alaska and things like that. But you can't, force these companies to. And I have heard that, his administration really wants to bring oil back down to $40. And I just don't think that is
$40.
Yeah, but I just don't think that's realistic at this point, because at that point, you're putting shale out of business because their break evens are much higher and they're not investing they're not willing to go into debt like crazy again.
Right.
So I think there's going to be a problem there. So,
And if
I
Jim's right and the Fed is raising rates, it almost makes it harder for them to invest. Is that right?
Of course, because it takes, those loans are large, right?
Yeah.
And so higher interest rates make that payment even
Okay,
larger.
so what about a Harris presidency for energy? Like, we saw Joe very, pro IRA, pro alternative energy, that sort of thing, green. And then, but he was also fairly supportive of oil and gas companies. Although saying he would pull nat gas exports wasn't support. I mean, so I would say Biden has kind of a mixed record. Would
Well,
Kamala be as mixed? I mean, do you think she would carry through on everything she says?
first of all, looking look, during Biden's presidency, yes, we had oil production went much higher, but that's also coming from 2020. When we
That's
saw
fair.
obviously
Yep.
a huge dip and negative $37. And so,
Yep.
of course, you can say, yeah, we ramped up oil production under Biden, but did we really? I think it's part of that ramping back up again after the huge fiasco that happened in 2020 and the whole world shut down. In addition, I think what we're also seeing is, there's a lot of big deals, a lot of M&As going in that industry. And I think right now, you had over the last couple of years, a lot of those smaller companies trying to pump as much as they possibly can to look more attractive
Oh, interesting.
to those larger companies.
Mhm.
And because huge deals were going on and never, these smaller companies said, hey, I want a part of that. And
Yep.
so they produced as much as they possibly can to make their assets look more attractive, since the big guys were just buying production instead of actually investing in capital expenditures.
And Tracy, is that because the regulatory environment was discouraging them from investing in capital expenditure?
Well, absolutely. And it's been, again, this still goes back to 2016, when, we had that big fall in prices, and yeah, everybody was laden with debt and crazy, and we started seeing mergers and acquisitions. But, so we have had lack of CapEx for quite a while. But at this point, majors are, really, it's been over the last couple of years where they're really just buying production and not at all looking to spend more money. We've seen, frac spread counts down. We've seen duct wells, which are drilled but uncompleted wells, still draining. They're not building that inventory anymore at all. So again, it goes back to, we've just had lack of CapEx and buying production, essentially. What I worry about more in like the Harris is, she did say she was going to ban fracking at one point. Now, she may have backpedaled on that because she got so much pushback on that, but really, how does she feel about it? We know her track record, right? She
Well,
has
and
a
I
track
think-
record. She
Can I
was a
posit her
senator.
opinion? Because I don't think she has any real opinions about anything. I just think she says whatever group could get her elected and further her career. That's what it seems like to me, by the way, too. I know that probably sounded political, but I've heard her say ban fracking to ban fracking groups, then let's increase fracking. I don't, you know what I mean? I just wonder what party she's going to be furthering their opinions more than her own. That's my opinion.
Well, and will she have somebody like Granholm as her energy secretary, who is
Yeah.
not an expert?
Granholm couldn't hang with this conversation about
Right.
my knowledge of energy policy, let
Right.
alone Tracy's and yours. Yeah.
Right. So could it be, I mean, with either candidate, kind of a know-nothing cabinet? Like, do you expect, because people act like Trump is this vapid guy and people act like Harris is this vapid woman. Could they have a kind of a know-nothing cabinets where just not a lot gets done?
Well, that's what I always hope for. I don't want
Right?
anything to get done.
The best thing that can happen is gridlock on
That's what I
in
think.
DC, right?
For about 40 years of my life, I used to, on my list of who I voted for in all political races, is who's the dumber one and less likely to get anything done. And then I put that as a positive, not a negative. So I used to argue with people in college, no, you want idiots in office. The smart ones steal too much. So yeah, I think that a know nothing, do nothing Congress could be fine. We like gridlock. Tracy, that's what you were about to say too, right?
Yeah.
Great.
So,
Okay.
yeah.
Giving me some optimism, guys. That's great. Okay. So I want to move on to tech. You know, as we've had this kind of really volatile week, we've seen especially Nvidia really has, you know, has taken a dive, and it's kind of teetering, it appears. And there's been that traditional, is Nvidia the Cisco of 2024 or whatever, Cisco Systems of 2024? You know, I'm just curious, and there's always been also been this news about the DOJ going after Nvidia for monopolistic behavior. That's been, Nvidia said they haven't received that subpoena, but I've heard other people say they have. I'm not really sure what's going on there, but how much of Nvidia's stock price movement, and I know we'll just say tech generally, Jim, since I know you don't want to talk about individual stocks, but how much of, say, stock prices do you attribute to actual technological innovation versus speculation in this market? We'll use Nvidia as a proxy for kind of a lot of tech right now.
So the speculation part of it is what gathered the steam and pushed the 7 stocks to the all very close to being all time as far as like the regular index versus the equal weight index being extremely stretched. Those names were just had too much fervor, too much, because there was liquidity in the system. So let's keep a couple things in mind. For the last 18 months, M2 money supply has been going up, not down, in a period where it's supposed to be restrictive. That money shows up in places. And when I see speculative fervor, when I see craziness, that to me is an excess liquidity problem. I think we certainly saw craziness in Nvidia and the Mag 7 in general. To think that Nvidia, though, is an excellent business, and AI is an excellent thesis. And I think that over the last 2 years, obviously there was trade the Fed, trade excess liquidity, trade the AI trade. Those were the 2 things that were the biggest movers. I was furious that the DOJ released that in a day where Nvidia was already taking it on the chin, and then that news came out. But now I think of it a little bit differently. I don't care if there are weak hands holding Nvidia. I don't mind them taking a big punch in the face to see what will happen, because that could shake out some of the excess. But to think that I'm going to jump in and start buying Nvidia with both hands when it's at these levels, there's no way. If it's going to keep rallying, it's got to do it without me.
Yeah, Tracy, what do you think that? I know you look at a little bit of tech. I know it's not really your field, but what do you think?
Really, you know, I mean, I agree with Jim here, and I think that, you know, I still think valuations are ridiculous at this point, and you know, PE ratios ridiculous at this point. And so, you know, I don't think it's a bad thing if we see some more pullback in the tech market, to be honest with you.
Amen.
Right. So I'm also curious about kind of volatility in tech generally. You know, we saw tech skyrocket as we saw inflation skyrocket, and it allowed them to really grow their margins as other prices were rising. You know, if it really is mission accomplished with inflation, I'm not sure it is. And, you know, in the first segment, we talked about, you know, potential if Trump's elected, other things. But if inflation is really conquered, do we see compression in tech valuations potentially because they could feel some margin compression?
I think the only way margin compression happens, I don't have the answer to that, Tony. You know, but I'm going to throw it back to you. Is AI in the next 5 years as deflationary by increasing productivity as the internet was in the 10 years after its advent and adoption? Do you think that?
I actually think it's more deflationary than the internet was.
But on what time frame?
Actually, I have a graphic that I can put up where I show kind of up until, say, 2020, when we had COVID, we really had this rampant globalization, which was a lot of offshoring, a lot of concentration in Asia, a lot of, you know, that sort of thing. in COVID, we had work from home, and what work from home showed is that some of these jobs really aren't actually that necessary to be here, and they're not even necessary to be in the office. And so what we've seen in the return to office phase, and no one's really talking about, is more offshoring, because people have realized that they don't need that low-level marketing person or that mid-level accounting person or whatever here, okay? And so what that tells me, if something can be offshored or outsourced or contracted out, a model can be trained to do that work. And so we're in the early stage. I just had a dinner with a friend with a major software firm. And this person was telling me that they are now working with US manufacturers to, and they're working with the kind of 40, 50-year-olds within those manufacturing firms to automate the issues that they do. Okay, now you get your seasoned 40 to 50-year-olds in when there's an anomaly, right? And so they're kind of really pulling from their brains. Some of it is deliberate and conscious, and some of it is just video cameras looking at what they're doing so that it can adjust processes when anomalies come up. So I actually think what we saw in internet version 1 and 2 was a huge contributor to productivity. But what we're going to see, because AI kind of V1, which has been over the last 5 years or whatever, I mean, modern V1, and it's really been the last 2 years with like ChatGPT and that sort of stuff, which is, text to image and text to like organized text and research and that sort of thing. That's cool, but that's kind of missing where the main things are done in terms of efficiency. And that's things like what's one of the biggest issues we saw coming out of COVID. Well, we have global supply chains, right? Why do we have global supply chains? We have global supply chains for labor arbitrage and regulatory arbitrage, right? Well, if we have that stuff automated and it's closer, maybe it's not in the US, but it's closer, we reduce a lot of that supply chain risk, right?
Oh,
So
I like that a lot. Yeah.
right. So you can reduce supply chain risk. You can automate a large part of that manufacturing. And if you look at, and just to plug Complete Intelligence, we automate a lot of corporate finance activities where these are guys who are paid between $120,000 and $300,000 a year, right? And a lot of them, I mean, they're smart people, they're great people, but a lot of them are chasing down stuff to feed Excel. And it just doesn't make sense to pay someone $250,000 a year to do that when you can use artificial intelligence to actually improve the quality of it and reduce the time of it and all that stuff. So I don't want this to turn into a commercial for CI, but I do believe that the impact of AI is multiples of what the internet was.
So guess what? So do I. And that's why I think inflation genuinely is defeated, despite the fact that the government still continues just absolutely reckless and irresponsible spending. Because I think technology is ultimately very, very deflationary, and increases in technology are even more so. And the increases that we're seeing now are, but even, the internet still exists. And that was the most deflationary thing that we've ever seen ever. You can't just even for consumer inflation, think of it, you can do this on multitudes, but consumer inflation, you don't buy a TV until you've checked it with 100 different spots. That's what we're seeing, and that still exists. So I think inflation is done as well.
And Tracy, I talked to another friend of mine recently who was with one of the largest mining firms, Australian-based mining firms. He said he went into their kind of command center and they don't have people in mines anymore. And they don't have people on the mine site anymore. They have, those big trucks, they would regularly just accidentally run someone over, because they're so big and the drivers couldn't possibly see everyone on the mine site. And so now those trucks are fully automated, okay? And they can see where people are. They can see, they can go down into the mine, and that stuff is fully automated. So, and I imagine a lot of that stuff is happening or has happened in oil and gas. And I've had people come to me over the past 5-10 years here in Houston where they say, we need XYZ, automated on our rigs. Can you do that stuff? We don't do that stuff, unfortunately. But yes, I would imagine that oil and gas, part of their health and safety drive is probably to reduce that stuff, right?
Absolutely, particularly with pipelines.
Yep.
being
Yeah,
able
pipelines,
to
rigs, you know,
assess, yeah, where there's weakness or damage and things of that nature. And they're also, automating a host of all sorts of, other things.
right. So I guess I come to the end of this segment really kind of with the opposite view that I had at the start, where, we've seen a lot of volatility in Nvidia and, I think, Jim, you are optimistic about Nvidia. I'm not sure about the valuation of Nvidia, but what they're doing, I definitely think that what they're doing, and as they have more competitors come in the space, that capability will be broadened and even commoditized within probably 2 years, right?
Oh yeah, I think that there's going to be a time that you want to have Nvidia in your portfolio. I just don't think it's the right time now. Just because price changes can change the story. It's not at any price. So
Right.
yeah, I'm with you on that.
Right. And so in terms of kind of the cycle and rotation and that sort of thing, is now a time to be getting into technology generally, or is that past?
I don't think it is. I think it passed. I think now the next phase will be more the small caps, more the rotation will continue. And then we always talked about how tech loves lower rates, but small caps loves lower rates even more. Those companies within the Russell 3 times more likely to depend on floating rate, and people short them and long the Mag 7, and they have been putting on that trade for 2 years. So I do think that that's going to reverse. And I think in 2025, the Russell will be better to have than the NASDAQ. But again, I can't stress this part enough. My favorites have been the same for a year and a half, 2 years, and that's gold, silver, things like that.
Fantastic. Okay, very good. All right, let's move on to some energy. Tracy, you've had some really interesting tweets over the past week or so. I mean, they're always interesting, but you talk about a dip in Russia's oil exports due to maintenance. So how do these temporary reductions impact global oil supply, and what might be the strategic implications for Russia and OPEC?
Well,
So
it's not
I'm
just
showing a tweet that right now that has your Russia's seaborne crude shipments.
Yeah. I mean, it's not just solely maintenance. It's also they're having some internal issues, and then it's also under the guise of we're keeping our OPEC plus quota. We're getting in line with what we said that we were gonna do. They're also, starting to crack down on some of those dark fleets with sanctions. That is making somewhat of a difference, not as much as it possibly could, but again, I think that's the Biden administration still wants that oil market for sure, for sure. So, they'll turn a blind eye, and so, we'll sanction a couple of ships, but, the rest can
Right.
whatever they want to do. And that's the same way they look at it, Iran too. Iran shipping more oil than ever before. And, we just don't notice that.
And we've talked about this for years, right? And, whether it goes through India or whether it goes through Sharjah or whether it goes, somewhere else or direct shipment, there are ways for people to get their hands on that oil, and these things just don't work.
Oh, absolutely. For sure.
So
And
all they ever do with embargoes, all they're doing is rerouting supply chains. You're never
Right.
really embargoing. Right. Okay. Making it more clumsy.
That's why, they never make sense. It's just that, Iran is a special case because we, really have had sanctions for years, but literally they've just exported more oil than they have in a decade.
Right.
This year.
Well, and even with embargoes, guys, things like going back to the previous segment, if you don't think China is getting Nvidia chips because the US put in, I mean, come on. I mean, this stuff's happening, right? So, okay, let's look at Iranian oil. I didn't even know about this until I was looking at your feed, Tracy. You highlighted this trader Hector. involved in Iranian
Hector,
oil.
it's all.
Yeah, so can you talk to us about that, and how does that kind of shadow trading influence oil prices, effectiveness of sanctions, that sort of thing?
Well, they're probably obviously making a lot of money. So, it's this elusive trader that kind of came out of nowhere, which they never come out of nowhere, but we don't really know his name. They set up this office in Dubai, and suddenly they're the number one trader of Iranian oil. Now, of course, they say we only work with countries that didn't sanction Iranian oil.
Right, of course.
But but they're making a pretty penny, and it's, they're doing a good job because, again, what I said is, Iran's shipping more oil. I mean, you can track most of this stuff if you go to like tanker trackers or whatever that, track these ships and, watch for the ship to ship transfers and things of that nature. And so, it is somewhat trackable for people that say that it's not trackable. A dark fleet isn't actually a dark fleet. They
Yeah,
are still traceable.
right.
So if Tracy, if you were actually Hector, you would answer that question the same way. So we have no idea if it's you or not, correct?
But yes, I might be Hector.
So, and when you
I
say dark,
wish.
yeah, when you say dark fleet, does that mean they just turn off their IMO beacon and they're tracked by satellites, or what does dark fleet mean?
So a dark fleet is they're older ships that aren't necessarily registered anywhere. They can change flags. They do ship to ship transfers. They're kind of off the radar, not
Okay.
just turning off their signals. They're just kind of off the radar, older ships. Russia bought a lot of these going into retirement ships, which they are dangerous as well because they're very, very old. But hey, and then they'll insure themselves through a shell company because you can't get those insured through Western companies, and so that's what they consider a dark fleet, not necessarily just turning off your
And how
tracker.
much of like global crude trade happens through that? I mean, can you estimate, is it like 8% or something, or is it like 20%?
I wouldn't. I'd say 10 to about 10%.
10%. Wow. That's a lot. That's a lot, right?
Because if you took away Russia,
Right.
right, then that we'd be a lot less.
Okay. Okay. So
It's
great.
that they're one of the largest
Exporters.
producers and exporters in the
Yeah.
world.
And this Hector person is still trading, right?
Yes,
Great.
Hector is still trading. They can't really nail him for anything yet.
Right. But he's trading in Dubai, so would people
Which
nail
the
him?
UAE doesn't really care about. They don't have sanctions on Russia or Iran. They don't care.
Yeah, exactly. Okay, and then I want to talk a little bit about European gas concerns, because when we talk about Russia, we always talk about European gas. So, or when we talk, sorry, the other way around, European gas, we always talk about Russia. So, European gas traders are focusing on more immediate supply, it seems, rather than winter storage. So, how sustainable is that? I mean, are the storage tanks in Europe prepared for winter, or how is that affecting Europe's energy strategy?
I mean, I think they are. I think they are full. Like, I mean, they're full. I think that's not really the concern. I think the concern is more of those cargoes are being diverted to Asia because they're getting better prices at Asia because Asia needs it more. And
Okay.
so I think the concern is if and when they need it, they're not going to get it. And so we've seen kind of TTF prices, European gas prices rise as cargoes have been diverted to Asia, not only for, contract wise, but, a lot of spots gone to Asia recently.
Why is it going to Asia?
Because they need it.
But-
Because they need it, so
Solid
they're getting,
answer.
everybody's gonna go where they get better prices. You saw
Right.
Pakistan for a long time didn't have the credit to buy natural gas for years and years and years. They're kind of getting back in. People are willing to risk it on Pakistan again. So
Okay.
you still have these open markets. You still have Japan, largest LNG
Right.
importer, and they still they buy a lot of spot as well. And so, you're still seeing natural gas demand really strong in Asian markets. Everybody always thinks, oh, it's all about China, but we've seen manufacturing increase in Vietnam, in the Philippines, and South Korea. And so, all of these are very energy intensive sectors. So
Yeah, and you mentioned Pakistan, and I just wonder, Bangladesh, with Mohammed Yunus now leading Bangladesh, if they're more credit worthy. Have you heard anything about that? Because they're very LNG and nat gas focused. Have you heard anything about their ability to buy more gas?
well, I think that, I think we're seeing them buy more on the spot market. So I would assume, and I am assuming this because I don't know for a fact,
Okay.
that they look more creditworthy to customers at this point, or
Okay.
to sellers.
Very good. And it seems that China's economy is hitting some problems, but they're still manufacturing and they're still exporting at a decent rate. So is there oil and gas demand fluctuating, or is it kind of seasonally appropriate for where they are in a normal year?
It's seasonally appropriate. I mean, last year, everybody was talking about China was terrible, terrible, and they imported more oil and gas than they ever have. It was a tip top year, and they were, and their property sector was imploding. We saw the PMIs come down. We said, everything's contracting. Meanwhile, they're still importing. And I know a lot of people say, well, they're just filling up their SPR. But
That's a massive SPR. It's like all of Zhejiang province.
They do, but that's not where we saw all that buying, because we saw them increase quotas for teapots.
Yeah.
That they can refine more. So it wasn't all going into the SPR. I always like to push back on that when everybody says, oh, they're just buying for the SPR.
Yeah, very good. Guys, thank you so much. It's great. I really appreciate it. You guys have decades of experience, and I can't believe how much benefit we get from that. So thank you so much for your time. Have a great weekend. Have a great weekend. Have a great week ahead. Thank you.
Thank you, guys.